Many buyers don't get that chance. They fall in love, they get under contract, and then they realize they bought a house that makes them house poor. This section alone is some of the most important VA loan tips I can give you for this whole calculator. Lenders do this all the time, especially these big telesales lenders. They tell you what you want to hear to win the business, and then magically things change at lock. It's 9 p.m. on a Saturday, you just found the house on Zillow, you're a veteran, you know you're going to use your VA loan to buy it, and you need to know what the payment's going to be right now. Most people pick up the phone Monday morning and call their lender. After this video, you'll be able to run that VA loan payment yourself in about 60 seconds. No lender call required. Here's why this matters. Last week I had clients tell me they didn't want their monthly payment to go over $2,200 a month. They found a $300,000 house and they fell in love with it. They assumed they were in the safe zone. When we ran the actual numbers, the principal, the interest, taxes, and insurance, the real payment came in at $2,400 a month. That's an extra $200, and it made them stop and reconsider whether they could actually afford the house they were emotionally attached to already. Now, they ended up stretching for it because they decided it was worth it, but they had a choice because somebody showed them the math before they signed anything. Many buyers don't get that chance. They fall in love, they get under contract, and then they realize they bought a house that makes them house poor. This is exactly what this video exists to prevent. So today we're going to get the VA loan explained the practical way by walking through how to actually calculate your payment end to end using a tool that's free and built specifically for veterans. Stick with me to the end of this video because I'm going to show you how to flip a single toggle on this calculator and instantly compare what your payment would look like as a VA loan versus a conventional loan. That is where the tool gets really powerful for veterans trying to figure out which loan actually wins for their specific situation. I'm Joe Nelson, team leader of Nelson Home Group at Keller Williams KC North, a licensed mortgage originator and a 21-year retired Air Force veteran. Our team's the highest rated team on Google in the Kansas City metro. That combination of realtor and licensed mortgage originator matters here because it means you're getting both sides of this conversation from one person who actually understands how the mortgage and the home search really fit together. I make these videos because I want to work with you. That's the whole reason we do this. If anything I cover today applies to your situation, reach out. My contact information is right below the video. You don't need to have everything figured out before you reach out. That is literally what the conversation is for. Now, let's get to the calculator. You're going to head over to the website on the screen, and I'll put the link in the description so you can click straight through. Quick note before we dive in, this calculator is built to give you a really solid estimate of what your VA home loan payment will look like, but it's not a guarantee, it's an estimate. Final numbers always come from a lender once they pull your credit, look at your full picture, and put the actual loan together. Don't make any financial decisions on a calculator alone. Use this to plan. Play with scenarios to figure out what makes sense for your life, but talk to a lender before you commit to anything. Cool? All right, let's get into it. The first thing you'll see across the top of the calculator is 4 buttons: VA, FHA, Conventional, and USDA. We're going to start in VA because that's what most of you watching this are going to use. You can play with the FHA and USDA toggles if you want for fun, but for the vast majority of veterans, the real conversation is VA versus conventional, and we'll come back to that comparison at the end. The first field is home purchase price. This is just the price of the home you're considering, or the budget ceiling if you're still figuring out what you can afford. Plug in a number, and we'll use $300,000 as our example for this video. Next field is down payment. The whole superpower of the VA loan is that you can leave this at 0. That's the benefit you earn by serving. You don't need a down payment. Now, you can put money down if you want to, and it'll lower your payment and lower your funding fee, but you don't have to. And here's a nice feature of this calculator. It automatically updates your funding fee based on whether this is your first time using the VA loan, whether you've used it before, and whether you're exempt, and whether you're putting any money down. You don't have to do all that math yourself because that number changes based on the scenario. The calculator handles that part. Next is interest rate. This is where most people get it wrong, so pay attention. Honestly, this section alone is some of the most important VA loan tips I can give you for this whole calculator. Do not, and I cannot stress enough, do not Google current mortgage rates and plug in whatever number you see. Those rates are either flat out clickbait or they're base rates that don't account for what actually determines your rate, your credit score, your debt to income ratio, your loan level adjustments, the property type, all of it. You'll get a number that has almost nothing to do with what you'd actually pay. Here's the other thing you need to understand. Rates change daily. Actually, they change hourly, and no lender is going to lock your rate until you're under contract on a specific home. That's just how the process works. So if you're still shopping, don't expect a locked-in number yet. That's not how it works. What you can do is call a lender and ask a simple question. What are rates running today without any buy-down costs added in? That gives you a clean baseline number you can plug into this calculator and play around. Be upfront with the lender that you understand the rate can and will move between now and when they actually lock you in. You're not asking for a promise, you're asking for just a real number to plan with. One thing to know going in, most lenders aren't going to give you a real quote without first having you fill out a loan application. They need to look at your credit, your income, your debt picture before they can quote you anything that means something. So expect that. A lender who throws a rate at you without even pulling your credit or asking about your situation isn't quoting you, they're guessing, or worse, they're baiting you. Now, here's the tool that protects you in all of this, the loan estimate. That's a federally regulated document. Every lender has to use the same format. And in the top right corner, it tells you one critical thing, whether your rate is locked or still floating. This matters because when a rate is floating, a lender can put pretty much whatever number they want on that document and tell you whatever you want to hear. It doesn't mean they're lying, it just means a floating quote isn't binding. So you have to trust your lender. Make sure the numbers they're quoting are real in that current moment, and make sure you know whether that rate is the actual market rate today or whether it's a rate they got by adding points and buy-down costs you'll have to pay at closing. Those are two completely different conversations. Just this week, I had a refinance client get quotes from two different lenders. Both quoted her great rates. Both told her, don't worry, your cash to close is zero. But when I looked at her loan estimates, both of them had thousands of dollars in fees baked into the closing costs. They were just financing those on top of her 30-year loan without even explaining that to her. Lenders do this all the time, especially these big telesales lenders. They tell you what you want to hear to win the business, and then magically things change at lock. A good lender's job is to coach you to your best option, not bury fees in your loan and hope you don't notice. If you want a real number to work with on this calculator, call me. I'm a licensed mortgage originator. That's exactly the kind of question I answer every day. Next field on the calculator is loan term. The calculator gives you 30, 20, 15, and 10 as options. Most people are going to compare a 30-year and a 15-year. The 15-year rate is usually slightly better, and a lot of YouTube guys will tell you to take the 15 and save on interest. I'm going to give you the opposite advice. Always take the 30-year and make the 15-year payment if you can afford it. Here's why. I had a client a couple years ago that took a 15-year mortgage to grab the slightly better rate. Less than 2 years in, his job completely changed, his income dropped, and the 15-year payment was crushing him. He was forced to refinance, which cost him thousands of dollars in refi expenses out of pocket. And on top of that, by the time he refinanced, rates had gone up, so he got hit twice. He paid the cost of the refi and ended up at a worse rate than he started with, all to savor a quarter of a point on a 15-year he couldn't sustain when life shifted. When you take the 30 and pay it like a 15, you get the best of both worlds. You knock your loan down faster, you save on interest, and if life smacks you, job change, medical, divorce, whatever, you have the flexibility to drop back down to the 30-year payment without refinancing. Flexibility is worth more than a quarter of a point on the rate. Trust me on that one. Next field is annual taxes. This is the field most people skip, and it's the single biggest reason their payment estimate is completely wrong. Here's the easy way to estimate. Take your home price and multiply it by 1.4%. So on our $300,000 scenario that we're talking about, that's $4,200 a year in taxes. Now that might be slightly high for some KC metro areas, but I'd rather you start high and go down than start low and get a nasty surprise. Here's the better move though. Once you find a house that you're interested in, even if you're just playing around on Zillow or Realtor.com or any of the other websites, they usually will show you the annual tax amount on that property. So once you have that specific house in mind, throw that exact number into the calculator, and that's where you'll get a better number. This is the part where doing the math yourself actually beats guessing or talking to the lender. The listing data does the work for you, and your estimate gets really accurate. Next field is annual insurance. For a starting estimate, plug in $2,100 a year. That works out to about $175 a month, which gets most KC homes in the ballpark across most price points. When you're ready to get a real number on that, we work with some incredible local insurance partners here in Kansas City who will give you an actual quote based on the specific home you're looking at. If that's helpful, just let me know. Happy to make the introduction. Okay, next is the VA loan use dropdown. 3 options: first use, subsequent use, or exempt. First use is your first time using your VA loan. Subsequent is any time after that, and the exempt checkbox right below it is for veterans with a service-connected disability rating of 10% or higher. If that's you, the funding fee is waived entirely. I'm not going to go deep on the funding fee in this video. I've got a full video on that called The Hidden VA Loan Cost That's Putting Veterans Upside Down in 2026. It walks through the funding fee, who's exempt, and how it gets calculated. The link's in the description below. The short version though, the calculator handles that math automatically based on what you select here. You don't have to think about it. Now, look at the output box. The calculator gives you your estimated total monthly payment at the top. That's principal, interest, taxes, and insurance combined. Below that, it breaks out the P&I, or the principal and interest, the taxes, and the insurance separately so you can see exactly where the money's going. And then this line, and this is the line I want you to pay attention to. No PMI ever, saving approximately X dollars a month versus conventional. That right there is your VA superpower. On a conventional loan with less than 20% down, you're gonna pay private mortgage insurance every month. For first-time buyers with good credit, PMI is often calculated at around 0.4%, but it can change. It's so situational on the loan. But let's assume that on a $300,000 loan, that's about $100 a month. But PMI can also run much higher depending on your credit score and your loan profile. The VA home loan eliminates that entirely. Over 30 years, that's potentially tens of thousands of dollars that stays in your pocket. Now, yes, on a conventional loan, the PMI is going to roll off, so it's not going to be the full 30 years. Okay, so here's what I promised you at the beginning. Flip that toggle from VA to conventional, and let's see what changes. The funding fee disappears, PMI shows up if you're putting less than 20% down, your overall payment shifts. Here's how to actually think about VA versus conventional. There are 2 scenarios where conventional might be the smarter move. Scenario 1, you're already planning on putting 20% down anyway. If you're putting 20% down on a conventional loan, you don't have PMI, period. Now, if you're exempt from the VA funding fee because of a service-connected disability, then it's basically a wash. Neither loan has PMI, the math is similar. But if you're not exempt, you're about to pay thousands of dollars in a VA funding fee for no real reason because conventional doesn't have a funding fee and doesn't have PMI at 20%. The whole point of the VA loan is the zero down advantage. So once you give that up, the math can sometimes flip. Now, you can sometimes get a slightly better rate with VA over conventional, so that's something to talk to your lender about. So if you've already got 20% down and you're not exempt from the funding fee, conventional is almost always the smarter call. Scenario 2, you're not planning to stay in the home very long. The VA funding fee is a one-time cost paid up front. If you're only going to be in the house a couple of years, you probably won't recoup it before you sell. Equity gains take time to build, and you'll have agent commissions to pay when you sell, which eats into your return. So if you tacked that funding fee onto your loan amount, it's going to put you upside down, and that's what I talk about in my other video. With conventional, PMI is paid every month. So PMI over a 24-month period might actually save you money. It's a lesser of 2 positions kind of calculation, and for short-term ownership, conventional with PMI often costs you less. VA rates, like I said, usually are a little better than conventional, but not always, and it depends on the day, the lender, and your profile. One critical caution on PMI. The number this calculator shows for PMI is just an estimate. Real-world PMI varies massively based on credit score, debt to income, loan profile, and specific PMI provider that the lender uses. Before you make any final decision on a VA versus conventional, you'd probably do want to talk to a lender, fill out an application, and get a real PMI quote based on your actual numbers. Don't bet a 30-year decision on a calculator's estimate. If you want to play around with FHA or USDA toggles for fun, go for it, but most veterans, those aren't really even going to be in the running. If you want to go deeper on VA loans, we've got a whole VA playlist. I'll put the link in the description. So now you've got it. The VA loan explained the way it should be, practically, with actual math on a tool you can use anytime. You can run any scenario, any house, anytime without picking up the phone. That's the freedom this calculator is built to give you. Head over to nelsonhomegroupkc.com/mortgage calculator and start playing with it. Plug in different home prices, plug in real listings, toggle between VA and conventional. Get a feel for what fits your life before anyone tries to sell you on what fits theirs. Here's the thing. We make these videos because we want to work with you. That's the whole reason we do this. So 3 doors are open to you depending on where you're at. Door 1, if you need help with a VA mortgage, call me. I'm a licensed mortgage originator. That's literally what I do. And I've got connections across the entire country. So it really doesn't matter what state you're watching this video from. Door 2, if you're looking for a home in Kansas City, my real estate team is the highest rated team on Google in all of Kansas City. We'll take care of you. Door 3, if you're a veteran outside of Kansas City, we have licensed loan officers in nearly all 50 states, and we have a national network of veteran realtors we work with all over the country. Realtors refer clients to each other constantly. That's how the industry works. Tell me where you're going and I'll connect you with someone vetted and trusted in your area. You can reach me right through the links below this video. Call me at the number, email me, or head over to my website and let me know you're looking to connect. Whatever is easiest for you, we'll be there. Don't sit on this. Whether you're shopping today or just dreaming about it for next year, the more you understand the math now, the more options you'll have when you're ready. I'm Joe Nelson. Let's go.